Hi everybody and welcome to Ice Commentary this week. It's Nick McDonald speaking from Trade with Precision, and we're taking a look here at the US dollar index and currency markets. So going back a few weeks ago, we were down here hovering around 80, and around back here was the last time I was on Ice Commentary. I've been away for a few weeks with Craig Cobb covering for me, and back here we were above 80. We then broke convincingly down below 80, and it started to look a little bit bearish. However, we'd also marked in the past that there was a support zone. So we had 80 as the first level, which was the big number, but also coming right down and looking on the monthly chart back in the past, right down here even to 79.25. We had some good support down here in the past as well. And we knew that there was a zone there where there was still a chance of price bouncing off it. Well, it's what's happened. We've come down, we've come towards the lower extremities of the support, and we've bounced off it. We've now got quite a bullish candle down there at a support level, and we're back not only above that 79.25, we're also above these prior touches here, which are more like 79.65, and we're back above 80. So we're right back above any form of support that was down there. You can see that we've been in this range for quite a number of months, and we are now starting to look more likely towards heading up towards the top of the range, back up around 85. So just a really well defined range, and right now a really clear rejection of that level. What I'm always looking for, if we look at the high of last month's candle, it was 89.86, and if we just look at where we are now, it's already made a high of 80, not 89. 80.86 was the high of last month, and 80.87 is the high now. So we have broken above it, if only by a tick. We've certainly now got the bullish candle, and then the breakout through that high starting to look more like a rally. Like I said, however, even though we're looking like rallying based on that, we do have these levels in the way. It doesn't change too much. For example, right now we're at 81. All it means is I wouldn't be looking for opportunities right now at 80, 81 when I've only got such a short window of opportunity up to 81. What I'd be looking for now is any pullbacks to 80 as buying opportunities, because if I end up buying at 80, then I know I've got a full run before the next resistance at 81. Equally, if we break up through 81, I'll look for buying opportunities either on the break or on the pullback into 81 after we break up through it, because then I know we've got a good window of opportunity to 82. The other thing that's great about it when we're buying around these levels is not just that window of opportunity that exists, but also if I buy just above 81 with a stop just below 81, then I've also got my stop loss protected by that strong support and resistance level itself, as well as having that benefit of a run towards 82 with nothing else in the way. So then I have protection for my stop loss and no protection for my target. That's a great kind of trading opportunity. So I am bullish for the time being. And I'm bullish really as long as we're remaining above 80, I will remain bullish here. I'd like to see 81 get broken, because 81 getting broken also means we'll have broken these highs, also will have meant that a daily chart is no longer in a downtrend. As of right now, it is officially still in a downtrend. We're still making lower highs and lower lows until we can break up through these highs. If we just look at this quite closely, you can see we just haven't quite nudged up through those highs yet. We're pretty much there now, so any breaks up through 81 will be really just a convincing end to that daily downtrend, and starting to reconfirm what I'm seeing here on the monthly chart, which is very bullish at the bottom of the range and looking for a breakup now, a sustained rally from here. Whether we get that sustained rally or not right towards the top of the range, we're yet to see. But right now, for example, right now for certain, in the short term, I am bullish until I see a reason to be otherwise. The currency markets, the spot currencies back this view up. Let's have a look at the Euro first of all. The Euro as well, we'd had this big level marked in of 135. Yeah, 135 been a key level, some really good support and resistance in the past, and some really precise touches in there as well. We'd broken convincingly through that, a bit like we'd broken down through 80. But now what's happened, we've got this big rejection candle, and now we are back, even though we're just below 135 now. We're currently trading at 134.90. So we broke up, but then rejected, and now breaking down through the low of that rejection candle. Euro dollar is looking like it could pull back further as well, and if it does so, it's going to push the dollar index higher. If we look at cable as well, GBP USD, see a similar thing. We'd marked in the top of the range in the past. These are all lines that I had drawn in before, many weeks ago, weeks or months ago. These are not new lines. We're drawn in this upper resistance level for the top of the range. We've come up, we've come very, very close to it, come within a whisker of it, and we've got a bearish candle now. If we break down through the lows of last month, which we're not too far away from right now, it will be starting to look more like coming down towards the bottom end of that range. Also, if we look at dollar yen, which is often the one that bucks the trend and doesn't confirm the direction. This is something that really is the icing on the cake for me being bullish, because when I look at this on the monthly chart, we do have, I'm going to move that candle across, we do now have last month a small bullish candle in that moving average zone, nicely touching the 10 period moving average now. If we just get a break up through last month's high, that's a very bullish sign there on dollar yen and looking like going higher, and a bullish US dollar versus the yen, while at the same time has been bullish against the euro and the British pound. We just haven't seen that so much lately. So it's a scenario here which just lends some extra weight to the dollar index itself being bullish, especially because the chart itself looks bullish, but it's not only is the dollar index showing us some direction there, it's backed up by the euro, it's backed up by cable, it's backed up by the Japanese yen, and that's just the ones I've chosen to look at on this video to keep the video at a reasonable length. But we are starting to look more bullish on the US dollar. We do just need to see a few more very small things to absolutely confirm that, and a breakup through 81 would really be a absolute confirmation that we are no longer in this daily chart downtrend. I do anticipate that will happen, because I do think that the markets are showing that bullish sign across the board. US dollar looks set for a rally. Even if we decline in the early part of this week, I will be looking around 80 for buying opportunities. If we break up through 81, I'll be looking for pullbacks to 81, or opportunities on the break of 81, also for opportunities on the way up towards 82. Hope that helps everybody. Have a great week's trading. Speak to you on Ice Commentary next week.